Schwab Asset Management is proud to support the Inside ETFs podcast. As one of the nation's largest ETF providers, Schwab Asset Management offers insights and perspectives that can help advisors build on their ETF expertise. Did you know that more millennials are choosing ETFs as their investment vehicle of choice? Or that many investors plan to increase their allocation to fixed income, smart beta, and actively managed ETFs? Find out how ETFs can support your clients' goals with Schwab Asset Management's educational resources. Learn more at schwabassetmanagement.com/ETF know-how. Hello and welcome to Inside ETFs, the podcast where we bring the latest and greatest ETF industry perspectives directly to you through in-depth conversations with key thought leaders from across the ETF ecosystem. I'm your host, Douglas Yones, the head of exchange-traded products at the New York Stock Exchange, the home of ETFs. Now, today I'm joined by Jed Laskowitz. Jed is the global head of asset management solutions at JP Morgan, where he oversees more than $345 billion in assets across the multi-asset and quantitative solutions investment teams. Jed is also responsible for JP Morgan's global ETF business, which includes over 70 funds and over $85 billion in assets. Additionally, Jed is responsible for 55 IP. If you don't know much about it, of course, you could Google it. It is a recent acquisition that provides multi-asset portfolio model management and tax transition capabilities to financial advisors and institutions. Clearly, we have a lot to cover. Jed, thank you so much for being here.
Great to be here, Doug, and thank you for the nice introduction.
So let's talk a little bit, if you don't mind, about your role at JP Morgan. We covered a lot there in your title, but could you tell us a little bit about what you and some of your teams do globally and maybe a little bit about how you got into the ETF business along the way?
Yeah, I've spent nearly my entire career at JP Morgan, 26 years. I started in the institutional part of the business and then spent 15 years growing our mutual fund business. When I started at JP Morgan, our mutual funds had $1 million minimums and they were principally used for the JP Morgan private bank. And fast forward, 25 years, we're the fifth largest asset manager in the world, $2.5 trillion, the third largest active manager in the world. And my role in team, we're focused, and as you said in the introduction, multi-asset class portfolios, and ETFs have become an incredibly important part of what we do and how we do it, both on an individual ETF basis and how we include ETFs into multi-asset class strategies. ETFs are just a natural evolution for our business, and we want to be where our clients want to go, and it's very clear that clients are increasingly moving towards ETFs.
Yeah, it's just absolutely amazing, the growth of this industry. I don't know if you caught it, ETFs 2026. It was a PwC report, and they went out and really surveyed the industry. And I think it was that report where they suggest this will ultimately be a $20 trillion industry, which, for those of us like yourselves that kind of were there in the beginning, those numbers just are wild. Was there a spot as you were coming through and managing all these solutions and working on global businesses? I know you lived overseas for many years, where you said, this ETF structure, we're really onto something here, and we need to really go big.
Yeah, so we launched our first ETF in 2014, and that was in the multi-factor space. And to be very honest, we spent too much time before then having this debate about active or passive, and we came at it from a lens of an active manager. Really, the shift has been about the ETF as a vehicle and the efficiency that an ETF offers. So when we first started with ETFs in multi-factor, it was a great way for us to come into the market with something that we thought was unique to us, unique with our own intellectual capital in terms of design of those products, which continue to be a big part of our platform today. And then we started to move into the fully active space. From our standpoint, when we first got that experience with multi-factor, launched JPST, which is our ultra short-term fixed income ETF, which happens to be the largest active ETF in the US and maybe the largest active ETF in the world, depending on what you consider, active. It just became very clear to us that advisors were increasingly adopting the ETF vehicle, not just in passive solutions, but in active solutions as well. And as you said, since then, our assets have continued to grow. And for us, that's not our objective. Our objective is not to be the largest. Our objective is to be the most respected, the best. And if you do all that right, you will have large funds and you will grow. And obviously, an active track record is important. Advisors and clients will pay a premium for active management if you meet and exceed your targets. So that's really important. It will take time. It does take time. Track record's important. But we saw this catalyst happen really fast, and we're just excited to be part of what is a growing industry.
Yeah, and you say that nonchalantly, right? But JPST, the short term, JP Morgan short term ultra short term income ETF. I mean, that launched in 2017, and it is the largest active ETF in the U.S., potentially the world, as you said, depending on how you want to slice and dice. I mean, that's just incredible, right? So you can really see the power of you and your team to be able to enter the ETF space and really make waves in a very short period of time. I was hoping you could share a little bit about that, right? Because I feel like for me, I'm an ETF nerdler. I'm in the middle of this, but people say to me, friends, family members, "Oh, I saw JP Morgan launched an ETF." So JP Morgan's name brand recognition, if you will, all the way down to retail and certainly advisors is there. But that comes with you and your teams working on that, right? I mean, that's ultimately your development. How have you seen the evolution of your ETF business? And are you spending lots of times reaching out to advisors? How are people finding out about these ETFs to the point where it's in family name, it's in household conversation?
Yeah, we appreciate that, and as you said, that hasn't always been the case for us. We really started as an institutional brand, and 20 years ago, we really started in the advisor part of the market, really trying to lead with insights. We've got a program called Market Insights, which is led by Dr. David Kelly, our chief market strategist, and a team of economists and market strategists. We always thought it was important to lead with our views in helping advisors and their clients and institutions, understand the market and the market dynamics, and then follow with solutions that we thought help them navigate those markets. And the ETF vehicle, the ETF technology, has become just another tool that allows us to do that. So, our focus has been on how do we take our highest conviction, the strategies that we think are meeting the current demands of the market, and launch them in an ETF vehicle. So starting with multi-factor, moving into active fixed income, and now moving into active equity. Both our large cap growth and large cap value ETFs, JGRO and Java, equity premium income, that is the fastest growing active equity ETF in the industry, now over $10 billion. It starts with a market need. And listen, we're in complex markets. We said a year ago, we published long-term capital markets assumptions that, 4 is the new 6, and 2 or 3 years before, 6 was the new 8%, the 60-40 portfolio. We're in a year with, rates, rising, where 60-40 portfolios are down upwards of, 10, or 12%. We need to help clients navigate those markets with solutions that make sense. We are always thinking about that, innovating, and the ETF vehicle and ETF wrapper is just another way for us to help clients navigate complicated markets.
Yeah, let's stay on that point. I mean, as we're recording this, the markets are in yet another tough day, tough week. It seems like there's no shortage of concerns in the market, whether it's inflation, the Fed, fears of a recession. Do you and your teams look at that and then try and map that back to an investment trend, or how does your group go about the product management function, if you will, and say, boy, we're surrounded by this really tough, complex market. Here are the solutions that we can provide to help an advisor to help them manage their portfolios.
Yeah, I mean, It's a great question, Doug, and it does sound a little cliche, but we do really take a long-term approach to that. I think the worst thing you can do is be reactive in markets like this. And the typical, investor psychology is, you kind of get in at the top and you capitulate, at the bottom. A lot of what we try to do through our Insights program is help think differently about markets and diversification. And that means we need ETFs and strategies that can help advisors in all types of markets. So, I mentioned our value and growth strategies, and clearly equities are under pressure right now, but that's precisely the time that advisors and their clients and institutions need to be looking through their portfolio, understanding what they may or may not be exposed to, and making sure they're rebalancing, maybe taking advantage of markets being down and valuations being better than they were 2 or 3 years ago. So from our perspective, we're not nearly out of this. Inflation continues to be an issue. The Fed is going to have to move aggressively. That's going to push into the earnings picture, and we think markets are going to continue to be under pressure, and equities are going to be trending down. But you're going to have months like July, where markets perform well, and you have to be diversified and balanced. And using ETFs to be flexible and to dollar cost average into areas maybe that you're underweight is an important strategy. The only other point I'll make around this is taxes, become in a lower return world, taxes become more important, and actively managing, your tax liability, which is quite efficient in an ETF vehicle. So, all of those things are things we're trying to help our clients with.
Yeah, I'm glad you brought that up, and you're right, especially the tax piece, because we're seeing a lot of institutional investors and a lot of advisors say, hey, there are opportunities in a market like this. One of them being the tax trade, right, and cleaning up potentially some of the positions in an account. And we're frankly seeing it in the ETF world, right? We're seeing redemptions, large scale sales of mutual funds, and a lot of purchases in ETFs, which it seems like down markets tend to accelerate the trend into ETFs. Do you look out at this landscape and say, hey, beyond the tax trade, we actually think there's some opportunities out here for advisors? And are there ETFs that you think could help the advisor take advantage of those opportunities?
Yeah, for sure. I mean, I think the point about the acceleration of ETF flows in markets like this makes complete sense to me, given the ease of trading and flexibility, and I do think you'll see that trend continue. I also think you'll continue to see mutual funds have a very big place in the financial markets and with advisor usage. But the ETF trend, I was in Europe meeting clients last week. I kind of described the trend in the US as an unstoppable force, and ETFs are very much that trend that's not going to stop anytime soon. In terms of areas of the market where we've launched products that we think make a lot of sense in the markets that we're in, clearly for clients wanting to take a more defensive approach and to kind of wait and see how interest rate rises and the overall health of the economy will play out. Things like JPST are an excellent strategy. High quality, ultra short term, fixed income, proven manager with scale. And at the same time, for advisors and their clients that are looking to take advantage of the fact that the Russell 1000 growth is off 6% year to date, we have one of the best growth managers in the world in Gary DeVellapale. He runs our $35 billion large cap growth mutual fund. We launched a similar strategy in ETF form, JGrow, and we're really excited about the long-term opportunities for the companies that he invested in and the trends that he's focused on in the growth portfolio. So same thing for value. Value has not performed particularly well in the last 5 or 10 years. There are a lot of people that think value is coming back. Claire Hart, who manages our $50 billion growth mutual fund, and Scott Blaisdell, we launched Java with which is a similar strategy. And we're really excited about the opportunities active value will offer in a market like this. So we're covering all ends of the spectrum. Clients that want to put more risk on in this environment, clients that want to take some risk off, and you've got like our equity premium income in the middle. Which allows you to participate in some equity return and then get some yield out of the options premium in equity premium income. So we want to create solutions for advisors that are might have different investment outlooks based on how the market's performing. Maybe just last point I'll make is sustainability. Sustainability is an increasingly important part of the ETF landscape. We launched a TEMP, JP Morgan Climate Change Solutions, an active global equity ESG strategy that we're really excited about for clients that want to invest in companies that are focused on climate change.
Yeah, and as a reminder, if you're, Jed and I are talking through a lot of different ETFs, but if you're looking to screen for ETFs, if you're looking to learn more about the JP Morgan lineup, of course you can go to their website. There is a fantastic ETF screener with a search feature at etfcentral.com. That's ETF Central. It's very intuitive. You can just type in climate and you will find Jed's climate ETF. So you can type in growth, you can type in value. Jed, is there an ETF in your lineup that you look at and you say, boy, more people should know about this ETF? This should be doing better than it is. It should be a household name, whatever the statement is, but it just hasn't gotten the attention that you think it deserves.
Yeah, I don't want to be a broken record with this, Doug, but I like being a little contrarian. And again, if you look at the size of the mutual fund and ETF market, the largest category is, listen, we're in the US, it's large cap US. And the styles, you look at growth and value. And, because of the market environment we're in, JGrow and Java are two flagship large cap growth and large cap value, ETFs, I think are still much smaller, than they should be. And they are household names in active management. And although active ETFs are growing, there's still a small percentage of the ETF industry. I know we're talking about these billions of dollars that we've raised in certain funds. Active ETFs are still less than 5% of the US ETF industry. Now they're 10 to 15% of the flows, so flows are growing. But I'll tell you, JGrow and Java, incredibly high quality active management in growth and value, are two ETFs that I think deserve a lot more attention.
So for investors, for advisors, particularly wealth managers, if they're coming into this and saying, wow, I maybe didn't realize JP Morgan had this extensive ETF lineup. I'm not connecting with you, but I should be. How should they best be thinking about engaging with your team, with the relationship managers at JP Morgan?
Yeah. Let me maybe add one more point, Doug, before I talk about how to connect with the team. And the one other point I wanted to make is you mentioned 55 IP in the introduction, and 55 IP manages, along with JP Morgan, model portfolios of ETFs. And again, I think one of the most challenging things right now in these markets is to be an asset allocator, and also the complexity of managing taxes. And I do think more and more advisors are looking for solutions to help them do that. And that's also something I encourage, if you're kind of on our website and interested in learning more about some of the things we're doing, is look at what we're doing with 55 IP. In terms of working with us and contacting us, we have over 200 salespeople across the industry. Our ETFs and funds and strategies are available on pretty much every large platform across the advisor market, and of course available for transactions directly on the New York Stock Exchange and others with our institutional clients. jpmorganfunds.com is where you can get access to an incredible amount of information about our solutions and our market views. We also have an Insights app, which you can find on the App Store. Just search on JP Morgan, and we're really here to support our clients in any way they need it.
And one of the most welcoming teams in ETFs, I can tell you that after having known them for the better part of a decade. That is a wrap on this edition of the Inside ETFs podcast. Now, as a reminder, you can find this episode as well as many other episodes of the podcast on the New York Stock Exchange's website, homeofetfs.com. Again, thank you, Jed, for being here to share your insights. Stay tuned for upcoming episodes featuring thought leaders from across the ETF ecosystem. I'm Douglas Yones, head of exchange traded funds at the New York Stock Exchange, the home of ETFs. Schwab Asset Management is proud to support the Inside ETFs podcast. As one of the nation's largest ETF providers, Schwab Asset Management offers insights and perspectives that can help advisors build on their ETF expertise. Did you know that more millennials are choosing ETFs as their investment vehicle of choice, or that many investors plan to increase their allocation to fixed income, smart beta, and actively managed ETFs? Find out how ETFs can support your clients' goals with Schwab Asset Management's educational resources. Learn more at schwabassetmanagement.com/ETF know-how.